And we're live this week in Coverager for the week of May, June, July, June. It's
This
uh,
joke
it's
is never going to get old.
it's not it's early June 12th. So it's the week of June 5th, June 6th, something like that. And I am live in podcasting headquarters in Naples, Florida. We have, of course, our my co-hosts for this week in Coverager, Sheffy in New York City, Avi in a hideout in a safe house somewhere in Maine eating lobsters. Good morning to you.
Good
Good
morning.
morning.
So for this particular week, there's absolutely no doubt what the story is going to be. Lemonade filed for its IPO. I think this was expected, although there are a lot of stories around the IPO and what their intentions were, and whether they were looking for an exit, and what SoftBank's say in this was, and what their intentions are. So crazy week when it comes with everything that was going on and the Lemonade IPO, but a big deal, right?
A big deal.
Yeah.
Yeah. Um, Comments?
I'd be interested to hear, what you have to say, and Sheffy, I'd be interested to hear what you have to say. We may not agree on all of the things, which is fine, but it's interesting. It's very
Yeah.
interesting, and you can't just, Lemonade has results. They're
Yeah.
not coming in with nothing. You could argue if it's good or bad, but they have a big customer base, considering the time they've been in business. Whether how much they spend or not, we'll get into that. But it's a big story. It's a serious company, and let's see what we think about it.
Yeah, well, it's interesting because I wrote an article 3.5 years ago called "Don't Believe the Hype." I think people misunderstood it because on Twitter, when Lemonade filed, everyone was tagging me saying, "Hey Nick, what do you think?" Wanting me to like come down with my hammer, my Thor hammer, on them. But people are picking up that article because people are starting to research Lemonade. My articles has a lot of SEO, so Google places it pretty highly on it from the beginning, right? Um, I thought the "Don't Believe the Hype" was more about Daniel Schreiber's and the co-founding teams. It seemed as though it was more hype in what they were trying to pump, and I didn't see the business model in it. It was peer to peer, the whole charitable element. I didn't buy it, and people were talking about this is going to be the new Uber insurance. So don't believe the hype was not these. This won't work, or this isn't a good idea. It was just more of these it's like when an insurtech comes in and starts throwing out blockchain and AI and just throwing out these terms to get attention. That's what that smelled like to me. So that was the "Don't Believe the Hype." It was clear early on, though, Avi. I thought I think you're correct. Like the founding team is highly skilled. They know what levers to push. They pushed those levers. They knew exactly what they needed to do. Um, in my opinion, though, the only major advance that they made was in user interaction. Other than that, they're a commodity, and it's going to be for me. It's going to be really, really hard for them to justify that valuation selling a commodity. And it seems as though they're expanding into other commodities. So I'm not sure whether their technology is going to give them enough lift to overcome the commodification because the numbers are clear. They have numbers. They're not great. They're growing rapidly. In insurance, growing rapidly in a commodity space doesn't really work out well. I think in this case, I'm going to struggle to justify the valuation unless there's something else that I'm not seeing. Sheffy?
Um, so first thought that came to mind is that they're romanticizing insurance. That was the sentiment I got when I was reading, obviously, the paper, right? They're talking about love, they're talking about fun, they're talking about making insurance playful, and that may read well to somebody from outside of insurance. And it may be the case when we're talking about 90% of their customers not switching from a different carrier, so first time insurance experience. But there's that saying that, you marry first for love, then money, then companionship. So that's the whole premise of Lemonade. They're talking about growing with their customers, because right now the average premium is $150 per year, right? For at least for the renter, which seems to be the majority or the bulk of their business. And they're talking about adding pet, which wasn't new. I saw Lemonade Life Agency, which that was something new to me, right? Expanding into life, which I would assume in my mind, not as easy, fun, and playful. This is kind of a more serious line of business with a lot of different connotations. Not an easy sell, obviously. This is not where AI Maya and AI Jim will show their strength. So here's the challenge, right? The challenge is we have a certain demographic that's less than 35 years old, or that's 75% of their book, I believe, and then a very low premium. So their scale, but profits are limited. The other issue, which you mentioned in terms of technology, is that, sorry guys, but always allergies. The other issue is they need to be in a space where the risk is somewhat more predictable than others. And I know we're talking about insurance, but if you think of technology and training AI and machine learning, that comes into play at kind of, pet insurance and renter's insurance. It makes a lot of sense because you can control a bulk of the claims or the customer service. If they, something that they could have thought or could put in their presentation was we could expand to general liability, professional liability, right? That's closer than somebody going and buying life insurance after the age of 35, thinking of their demographic. But they know that line of business is so challenging in terms of how fragmented it is and how harder it would be for them to automate. So their strength is also their weakness, because they can only grow in products where they can lend their technology. Because for them, it's really all about whatever it is that they're doing, they need to be very efficient at it. Now, to me, they're still a company of over 300 people. Not all claims or there are parts of their claims process that are being handled with external vendors, which was a limit when they were talking about it in a limiting way when they're considering expanding to globally, right, in Europe. I think expanding to Europe was a big mistake because it isn't easily scalable outside of the US. And even within US, you're talking mostly about I think it's California, New York, Texas, right? So that they are feeling like they're in 75% of the market, right? So they understand they can't just be in renters. Not a lot of talk about home insurance. I think with home, it was about 10,000 and above condo owners. And to me, they're talking about the graduation, right? The graduation element of customers. Meanwhile, in the numbers, only about 1,200 or so graduated from being a renter to having a home insurance with Lemonade. So how are you going to, we don't know for certainty that element is actually going to work for them, because the minute the pricing is going to go up, right? Right now we're talking about $150,000 on average. Who's to say that the customer continues their love affair with Lemonade and doesn't shop around, and that the marketing doesn't have to increase because you have to put an emphasis on retention, right? So it's a big question mark. There was not a lot of discussion about retention or anything that I could glean to say, okay, I could see this happening. I think this is the risk, or this is the question mark. But aside from that, obviously, they do have, I think I will call this scale in terms of the amount of customer base that they achieve. Avi, what do you think?
So, to your point, we talked about the graduation, and that's something that they wrote about, I believe, in late 2018, kind of saying, well, here we told you our strategy. This is why we focused on renters. We were looking for that graduation. So from reading from their S1, I want to read two paragraphs. Our business model is premised on the expectation that a significant number of our users that are renters will continue to retain coverage with us as they move from being renters to homeowners. Currently, however, given our limited operating history, substantially all of our current homeowner users are new users who were not previously renters with us. So that's point one. Point two, for example, our user base is made up primarily of renters, and we have very few instances of those renters becoming homeowners, a key element of our business model. So if you are a millennial and if you claim to understand millennial, and that's what Lemonade talks about, millennials, Gen Z, then you know that the chance of millennials becoming homeowners in the near future is very slight. I mean, we don't have any money. COVID-19 is making it difficult to become a homeowner. People are saying, oh, people are moving out of the city. And someone said, well, where are they going to get the down payment to buy a home?
Yeah.
Where are they going to get the down payment?
Stay in the city. The cities are the least affordable places to live. Not only just not the down payment, they can't, like most people can't afford to buy a home in a city. So those two statements on the S1 obviously seem conflicting.
Yes, conflicting. And again, when I read that, I said, I mean, that's to say is pretty stupid. To say that that's your strategy to wait for renters to become homeowners, you're going to go bankrupt. Lemonade has enough money in the bank, not for 10 years from now, you know? So, and, you know, yeah, go ahead.
No, plus this was, I think a mistake I made was I thought that renters insurance and homeowners insurance were a lot closer together in its strategy, and it's not. Homeowners insurance is actually much more complex in that, yes, the premiums are bigger, but the risks are also much bigger as well, and it requires a lot more reinsurance support. So Joe Emerson from Branch Insurance and I had a conversation about this, and I thought that Lemonade going into homeowners would be more difficult because they only have a Demotech rating. They don't have an S&P rating. So I thought a lot of lenders would not allow them to go in. Joe told me that that's not the case, that lenders are allowed to accept Demotech. So that makes that transition that you talked about, Avi, even more disappointing. I thought their inability to get into the homeowners market was a lender driven thing, and now that it's potentially not a lender driven thing, I'm scratching my head saying, well, why aren't they getting into that market more aggressively? What's the scoop? Is it pricing? There's nothing really about that, and it could be Branch Insurance that Joe's in bundles auto and homeowners together. Maybe there's a sophistication. It doesn't matter if you're a millennial that's more urban oriented. Once you are ready to buy a house and you have a car and maybe some children, maybe the risk calculus changes in your head and you're just like, okay, well, they're cute. That's cute. I appreciate what they're doing, but I'm going with State Farm because they're going to bundle everything together, or Branch Insurance. They're going to bundle everything together and I'll feel safer about it. Am I wrong?
So, it's exactly when they talk in their S1, they say, we haven't seen much competition on the renter side, insurance companies after us. But for the homeowners, yes, they say there's a lot of competition, and customers may value other things. For example, they might think that cheap is not good, or they will get other services like bundling. And it is a big deal. My father-in-law this week actually, came in and said, hey, Avi, look at my State Farm app. He bought a car and, he used State Farm. So in the app, they added his car to his homeowner's insurance. And he showed me the app and it showed the agent and the email and the phone number. He said, what a great app. And I said, you know what? Let me show you Lemonade. Let me show you my app. And I showed him my app. Different people value different things. And yeah. I want to take you to another thing. And this is why we're talking today. You asked why. So you played video games, I assume, in your past, right? Of
course.
Sheffy did not. So let me ask you this. Do you remember that kid that you used to play with that always had that one trick and he kept on doing it again and yes. again and again? Anyone?
That's
Lemonade. Yes. That's Lemonade. So reading again from the S1, and this is current, approximately 61% of our gross written premium for the 3 months ended March 31, 2020, originated from customers in California, New York, and Texas. They are still putting renters as their top product. That's their trick. And now it comes to the strategy. We like to talk about numbers and look at their loss ratio and how much they spend on marketing and all that. I think Lemonade, and I said this all the time, and we called their IPO a year ago in April it was, we said, get ready for another pink roadshow like Lyft, alternative metrics. What they did now is very smart because they went in and they said, look, investors, look at what we accomplished, but look at the potential. Look at the potential of the graduation from renters to homeowners. Look at the potential of offering more products. And they say maybe life, maybe pet, maybe auto. They don't say what. They say, well, we introduced pet. They want to show the potential. They're in a serious competition with Root. And I feel personally what Lemonade did to Root is what Lyft did to Uber. If you followed Lyft and Uber a little bit, while Uber was having regulators shut them down in countries, while they were having rallies, while they were having cases where drivers killed passengers, Lyft was staying in the US. They went all the way for their international expansion, all the way they went to Canada. That was the furthest they went. Uber did Uber Eats, Uber Freight, Uber Autonomous.
Yes.
While Uber was settling in court with Lewandowski, the guy that came in from Waymo and all that, Lyft was then getting into the autonomous. So Lyft waited. They went for an IPO before Uber. The IPO was fantastic. Uber went for an IPO looking for a valuation of 120 billion. The IPO was very bad. So that's what I think Lemonade is doing. They were always, and you said, what to push, what buttons to push. They read the market well. They came in. Now the question is, will investors understand? Clearly not. They don't know insurance like you do or like Sheffy does. They're going to see, well, look at the potential. And you talked about the mistake launching in Germany. It wasn't a mistake. It was a check mark. We're global. We have that potential. They are licensed to write insurance in 40 states.
Wait. Since when is checking boxes on a list the right thing to do?
Well, for investors' sake, it is.
But that's okay.
But that's the game. That's the name of the game. It's not. They're not here because they really love insurance.
So it's keeping up appearances.
Yeah, it was always like that.
One trick pony.
It was always like that. Yeah, but that's the name of the game.
I agree with Avi, and it's no slight. Investors, I think the Lemonade was able to get higher and higher valuations because of the co-founders. The investors knew the co-founders will figure this out and they will make us more money. I don't think the investors were necessarily buying into, I'm going to put my money in here and these guys are going to revolutionize insurance and it's going to be $100 billion company. I think they were thinking the co-founders know how to do this. The risk is low because these guys are skilled. They're skilled business people that know how to check boxes off, pull levers. Hey, look over here. Don't look at the losses. Look over here, type of thing, and it worked. And they're highly skilled. These are high quality people. They will exit out. There'll be new ownership, and then they will do it again in some other industry. Am I cynical?
No.
Well.
Yeah.
Okay. No, Sheffy, go. Let's debate this.
No. So I think they expanded globally because they really wanted to exit as fast as they can from insurance. I don't think they entered the industry because they want to build a really long-lasting career here. So I get that, but I think all it showed was that insurance has borders. They're not as successful, or they don't even try to be honestly successful in Europe, right? And then there was this whole lawsuit that didn't even become a lawsuit with one. So a lot of noise. They're really good at riding the noise. And let's be frank, their seed customers were insurance professionals. I used to talk to people that you say they would work for an insurance company, and we bought Lemonade because we wanted to see what this is about. And I bought Lemonade because I wanted to see what this is about. It was so easy to do that because $5 renters insurance, and maybe it's a little bit higher, right? because they changed the default limit too, right? This is
That's
also another
another
trick.
that's another topic to talk
But
about. And yeah, go ahead.
I don't want this discussion to be, oh, the founders are brilliant, or maybe the founders are well connected, or get into the SoftBank, because who knows? That's just one element that we're not going to change that kind of a world. But if here's another thing, right? That probably they didn't have that as a checkbox, but they still checked that box when they realized that they're still, distribution is where the struggle is at. At this point, Lemonade is paying commission to Geico Insurance Agency for distributing their renters insurance product in some states. They don't go to say how many states. And I look at not necessarily what they say, but what they don't say. And when they listed their competition, I didn't see reference to auto insurance. I don't think they're planning to get into auto insurance. So this is where people shop a lot.
They had a graph. They had a graph where they showed, again, they're not saying that they did, but
okay.
they showed. Yeah.
So what was my point about Geico? Oh, they excluded Geico from the competitors that they've mentioned.
And Progressive.
Okay, and Progressive, very interesting, right? They're competing with a lot more than they are willing to say, which they kind of alluded to. And the question is Liberty, and obviously we all remember Liberty's Mutual, $5, now they're working under a Certainly brand. So if we were to say what disruption is, right? Disruption is when you can offer something for a lot less. But the minute Lemonade offered $5 renters insurance, there were other copycats offering $5 renters insurance. Yeah, and if they're going, right? So there you go. And then 30% is really kind of automated AI Maya, AI Jim. There's a lot, that involves customer support, right? The other portion of the business. So they're still limited. Obviously 2 thumbs up for creating a brand that resonates with first-time insurance buyers. And I don't say that, I'm not cynical at all about this. I purchased Lemonade insurance. And I also think that there's an element of data that they have that others don't, just because they're built digitally. So knowing how, if people linger on an app, just a reduced application, right? In claims, I'm told that, they can see how many times somebody upload a claim before they actually submit the video, so they can detect fraud. So there are elements of that, and that would be improved. Broadly, I do think the IPO will be a success, just because you do have people like, Professor Galloway that's going to say, oh, insurance is ripe for disruption. That's all he knows, because he doesn't understand the details and the complexities of building an insurance company, or what goes into reinsurance, or if they can actually scale. So the world outside of insurance, they have a different picture of how we do things. And I don't think that to succeed, you necessarily need all that insurance knowledge, but you need to acquire it as you go forward.
I don't think I don't think a lot of the folks that are either buying into the message or are just outsiders and don't understand how complex insurance is. When Lemonade decided to make the move to Germany, to me it was a giant head scratcher. Right, because they hadn't dominated the U.S. yet, and I saw nothing that said that they would. The issue I had was insurance. At the end of the day, interview. If we can get Warren Buffett on, we should have a conversation with him sometime. Insurance is a capital game. It's at the end of the day, you need a significant amount of capital in reserve to be able to back the claims, along with reinsurance. A move to Germany, to me, struck me as like, these guys are making it's more message than actual business, because that doesn't make any sense. Their capital is precious, right? By them going to Germany, they're taking very, very expensive capital and putting it into Euro bonds or German bonds or bunds, whatever you're going to call them, sitting there not doing anything, waiting for the first policy to be sold. And I'm scratching my head saying, you haven't even milked out everything you can milk out in the United States, and now you're shifting capital to another entity to support business in some other part of the world that you don't really understand. It strategically, that to me, that didn't make any sense whatsoever, and it became like more of a business message, and I don't think investors understand it, honestly. I don't think they care to understand it. Like how much of a waste of capital that's going on in the background, how much reinsurance, like it basically comes down to this: because the capital is so spread thin, Lemonade is not necessarily going to be able to execute on what they're going to need to execute on, because they're going to be so dependent on reinsurers to backstop their entire operation. And Pure, the homeowner company, the reciprocal that's here in the United States, their annual report, Russ Buckmuller, that runs Pure, is very brilliant. And in his annual report, he had better KPIs. To him, he was basically telling his investors, you want to know how successful they are? Let's track this KPI. How much reinsurance as a percentage of our premium do we need? That number should go down every single year. That's how you know we're being successful. The more we can extract ourselves from full reinsurance support, the more control we'll have, the more money we will make. And in Lemonade, it's the opposite, right? Like they're going, by spreading themselves too thin, they're going to need more reinsurance support. They're not going to be able to extricate themselves from that. And ultimately, it's going to be the reinsurers that's going to kind of control their destiny and not themselves. That's my problem.
You know, I think to the Germany point, and this is something Schreiber mentioned, that they kind of hit like the glass ceiling in terms of renters. Like they really dominated the renters insurance market, which from his numbers is only 10% of the homeowners market. So it's not as big in general, but they always talked about how they have in New York, I believe it was 10% market share, something like that. They cannot operate in Idaho. There's no, many renters there. So for me, going to Germany was also, want to say global, but also there's a lot of millennials in Germany that rent. The problem was, and this is something we wrote about, lemonade in Germany does not mean lemonade. That's a big problem.
Yeah.
They don't drink lemonade, they drink beer. It's a different culture, a different mindset. And you really have to take things into account. And always there's the thing where, it's an American company. And just like Americans love to buy American made, Germans like to buy German made. And there's all the tech people that, it's cool to be with an American company. But again, Lemonade, they're very smart and they did the right things. And we talked about, Sheffy, you talked about the default limits. In their S1, they say the median age of the median net worth of an adult American under the age of 35 is about $11,000. Last time I checked, when you went to get a quote from Lemonade, the default limit was $50,000. In the beginning, it was $10,000, and that gave you $5. Now it's $50,000. So that's their way to increase prices without increasing rates. That's their way to upsell without increasing rates, because the image is very important. And the other thing is, I want to talk a little bit about the marketing. They spent $89 million, I believe, in sales and marketing. I believe it was 76 in advertising, or 79, something like that. They talked about how their strategy is to delight customers, because delightful customers fuel growth. So if you're happy, you go tell your friend. Apparently that did not work, because they had to spend almost double their marketing spend to double their customer base. So where's that, the virality of the product that they like to talk about, where friends tell their friends? And that's the problem with insurance. And I always said it, and I'll say it again. It's insurance. No one cares. Yeah. And I think they reached their limit with the millennials, with the renters. It would be interesting to see the pet. The pet could significantly, help them increase their revenue, but they're going to be in a big problem, and I'll tell you why. They can't rely, just like they relied on property managers, buildings for their partnerships. There's Trupanion that already is dominating that space. So they're going to have to go to that millennial, that pet owner, and say, listen, you're going to have to go to your vet, and you're going to tell your vet, whatever you recommend, I'm not going to buy. I'm going to go with Lemonade. So you're going to have to put that millennial in an awkward place to say to the vet, I'm sorry, I'm not taking your recommendation. Lemonade saying their pet insurance is better. So it's going to be a tough sell. It's definitely the great product for them, but it wasn't the plan. The plan was to come with as much potential as possible, as little damage as possible to this IPO. And I also predict that it will be great success, and it's going to be very bad news for Root when they go for their IPO.
Interesting. Sheffy, I think Avi strikes at something that I think that's what stood out to me when I went through the S1 was the losses. But specifically, like it seems as though they've gotten the loss ratio under control. So for every dollar of premium, the actual claims dollar is beneath the premium. So the premium is covering the actual losses. But to Avi's point, customer acquisition is increasing. It doubled. I do think they increased their customer base by the premium grew by by 3x. So it took they doubled the marketing budget, and they increased their premium by 3x, which is, I guess, okay. But when you add the marketing and sales, the customer acquisition costs to the loss ratio, the combined ratio is like still very, 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 very high. And to Avi's point, I'm not sure they're going to be able to dramatically lower that.
No, and this is the problem with a low end product. Like, you still have to pay an engineer, whatever that salary, $150,000, $200,000 a year. He does the same work. So Root engineer and a Lemonade engineer, technically they do the same work, but the premium a Root engineer can generate, because it's auto insurance, is significantly higher than renter's insurance. And that's where I always felt the problem with Lemonade was that, but again, that problem, on the other hand, we're able to generate more policyholders. So they could say tomorrow, look, we built our customer base. We are now going to introduce a more expensive product.
Yeah.
So the product is average. It's renter's insurance.
Yep.
So filings isn't all that different. Maybe with pet insurance, are going to introduce something revolutionary, but I doubt it. Aside maybe from the zero deductible, I don't think that's revolutionary. But so average product, good business model. I think still the issue is they have to get the average premium to go up. They're talking about 150. They're talking about going to 600. They don't have 10 years. I don't see that. I think they need to do something sooner, and that's why. So if you remember last year, General Catalyst partner came to Lemonade, and he was working with them for a period of 9 months. Obviously, they're not going to confirm this, but my understanding is that they were talking about potentially acquiring companies and what that strategy could look like for Lemonade. They didn't mention anything about going beyond insurance, which strikes me odd, or they just want to keep the cards to themselves, right? It will make sense for them to do something outside of what we're describing, because what we are describing, they've created this landscape that works really, really well for this type of customer that they got, but they need to go beyond that. It's that simple. I didn't think the filing offered anything else revolutionary.
I think, again, it's like a game of saying, hey, look at our great potential. That's what they're selling, the great potential. And that's it. But I said this, I think last week, and I feel bad for Root in a way, because really Lemonade, they weren't sweating. I'm sure they worked very hard to get to where they, are, but they didn't get dirty. Look at the claims of Root. Look at the reviews. They went into homeowners, renters, auto. They went to an enterprise product. Lemonade kept their cool, and they knew what they were doing. They had that one trick, the video game, and they kept on pushing those buttons, and they went forward. And that was their strategy. And I think, they didn't go according to plan. A lot of their things, Germany was not according to plan. But at the end of the day, they made the most out of it. I think they're brilliant for going for an IPO at a time like this before Root, because, again, if Root would have went in with their premiums, with their enterprise product, with the homeowners, and they would be able to show the bundling and how price per customer decreases when they bundle and things like that, and they'll talk about their technology and how they're going to be like progressive when they grow up, that would have hurt Lemonade. but Lemonade beat them to the punch, and then we'll see what happens next. Because once you go public, there's less pressure on you. So yes, you may be replaced. The board will say, "Get the hell out. We want a new CEO," or something like that. But you made your share, and you gave your investors the money back, which I think there's a lot of pressure on that. But we'll see what happens the day after the IPO.
So, Sheffy, what do you think of the whole potentially rumors that SoftBank kind of pushed this to an IPO because of their struggles, and they're looking to liquefy a little bit and try to take advantage of the market as is? Do you think this is a Lemonade decision, or do you think that SoftBank has some influence in it?
I don't know. I don't want to comment on something that. No, I don't know.
Any opinion, Avi?
We all have an opinion about SoftBank, and it's typically negative. SoftBank likes to play startups as well, so I think it wasn't, startup played WeWork just as much as WeWork played SoftBank, right? So there are two sides to every story. Lemonade has been, we felt like the IPO is coming for a while. I think the minute that Lemonade didn't get acquired immediately by folks like Allianz or AXA, they knew that they had to create a roadmap. And so it kind of makes sense. EverQuote went up to IPO, SelectQuote went to IPO. I think Lemonade is good at the core. So in terms of what they're offering, in terms of competing against first-time insurance buyers, I think that's good. With technology, that's great. Okay, so what's next?
I think they have, if I'm not mistaken, 274 million, something like that, in the bank. They needed to either, get more funding, which I doubt someone at this time would have invested in the valuation that they got with the SoftBank funding. So an IPO is a great way to give, some money back to SoftBank and all their shareholders. So they didn't have much time. Like, they needed to make up a decision because, again, time is running out and they have a lot of expenses, a lot of losses. So they had to make a decision, and I think IPO gives them the best potential.
Yeah. Before we end, another small caveat: the money that they raised, that's not runway money. The money that they raised is capital that has to support the business. They can't spend that. So I think time was running out. I think they were going to continuously need financing to support those losses because the business itself was not profitable. So cash flow coming in was not going to be enough to kind of cover their expenses. It could have potentially caused a rating problem, which would have been absolutely disastrous for them. If they had any kind of negative review on their rating, that would have been disastrous. So going to
just a last comment about the consumer reviews piece, because I mentioned this last time. Lemonade doesn't have Facebook reviews turned on. It's hard to find Google reviews turned on. And in the filings, they mentioned ClearSurance, and that ranks them really high. But some of these are just anonymized reviews where you can't tie the review to an actual person. So I do think they're not brave enough. I remember a period where Facebook reviews were on and they weren't all magnificent, right? There were comments about we'd like to have a phone call when we want to have a phone call and not just chat with bots. I think by now people that are coming to Lemonade understand the proposition and what they're about. So they're getting the customer that values these things. Like Avi said, we all value different things. But, the reviews in insurance, for the most part, nobody's really going out there and putting all the honest, sometimes hurtful reviews around claims for everybody to watch and see.
Yeah.
Still insurance, guys. It's still insurance. This is specifically renters insurance, but still insurance.
So there's the music. This is a lively conversation. I don't think this is going to be the last time we're going to talk about this. So should be fun to see how this plays out. Should be fun to see the implications of this across the industry to other companies. And
Do you know how many times they mentioned the word fun in their filings?
How many?
237.
Wow.
Yeah, but they mentioned claims more than that. So at least they know where to focus on.
How did you count that?
I kept on reading fun, and a few times playful. And I said, what is this? What am I reading?
Control F. And it came up 200 times. That's amazing.
Are you sure it's not also part of a fundamental, because they kept on saying how their technology
Maybe,
is fundamental?
Know.
Okay, just so, because they use fundamental a lot as well.
Maybe that's what I wanted to read.
Okay, well, not the last time we're going to talk about this. So, Avi, Sheppy, happy Friday, happy weekend to you.
Happy weekend, happy Friday.
Have
Everyone
a great weekend.
at home, continue to stay safe. We are not over the pandemic. So continue to play it safe, wash your hands, be a good citizen, and all of that. So until next week, this is This Week in Coverager. Bye, everyone.
Bye.
Bye.